afternoon and welcome to another episode of Safe Option Strategies Moving Market Podcast. My name is Jeffrey Dunyan. I'm the owner and founder of Safe Option Strategies. Glad to have you here on a Wednesday afternoon. As I'm recording this little introduction, the U.S. stock market has just closed for the day, and what a day it was. The Fed made their rate hike or cut or rate decision announcement today, and it was not well received by the markets. We're going to get into a little bit about what Jerome Powell said, maybe a little bit about what he did not say, and the way the markets interpreted it. We've got another big day of earnings coming up tomorrow afternoon. So tomorrow afternoon, we'll talk a little more about earnings, although we will take a little bit of time in this episode to talk about the companies that reported last night after the bell and where they moved and why they moved the way they did today. So glad to have you here for another episode. Make sure before this episode ends, you subscribe to our YouTube channel. Make sure you send in comments if you have them. I would love to give you an evaluation on on companies that you're looking at or interested in, or trades that you have on. We want to be as interactive as we possibly can. So with that said, enjoy the presentation. Well, it was a fun day if you were close to a computer and you could watch the market, or if you had a TV on and were able to not only see what the Fed announcement was at 2 o'clock Eastern time, but if you were able to listen to Jerome Powell's comments that came starting about 2:30 Eastern time. It was pretty interesting to watch what the markets did. You can see it right here that the Dow finished down 317 points. That was right near its lowest point of the day. S&P down 80. That's a pretty big move down on the S&P, and even more so the damage on the NASDAQ. Pretty dramatic. 2.25 points is a big one-day movement on the NASDAQ. And I do not expect that as we go through the rest of this week, this is going to get a lot better. You could see the possibility of a little bit of a breather tomorrow. Maybe the markets remain a little bit flat tomorrow and don't have any real dramatic movement one direction or the other. But don't be surprised either if it's either going to be that or a little bit of continued sell-off. If there's an up day in the market tomorrow, I think it's going to be very measured and very tepid. If for no other reason, you've got the remaining big trillion-dollar companies that are reporting tomorrow after the close. I'm talking primarily about Amazon and Apple. We got the reports last night on Microsoft, on AMD, on Google, and I believe Meta is tomorrow as well. So you've got, you had three big ones last night. You've got three big ones tomorrow. It's interesting. I found it really interesting today that Microsoft started a little bit to the downside, then it traded up for a little while and then went negative again. I think it was just too much for it to overcome the momentum of the rest of the NASDAQ and the drag that was taking place on the rest of the NASDAQ. But the Dow Jones Industrial Average managed to stay positive through a good portion of the day. And then when Powell made the announcement about rates, when Fed released its announcements about rates, that was right about here. And that was kind of in line with what people expected. So the Dow dropped a little bit right when that announcement came out. Then it wobbled a little bit. Powell started speaking. It started going up. And right here, you can just see it literally right there at about, I want to say it was really close to 2:45 Eastern time is when this thing really started to slide. And I'll tell you what happened at 2:45 Eastern time. Jerome Powell was asked a question. They had already made an announcement. Let me back up just a little bit. They had already made an announcement. The Fed had made an announcement that it was leaving rates the way they were. They changed some language from their previous release statement back at their last meeting in December, and sounded just in general a little bit more hawkish. Meaning they sounded like they were going to be a little bit tougher than what they sounded like in that December meeting. They sort of started to pull out from their toolbox the wet blanket and sort of dangle it over the fire, so to speak. Like, I know we said 3 rate cuts during the year, and a lot of people have speculated that maybe those could come as early as March, and or, maybe as early as May. And they're kind of dangling that wet blanket out there with the statement that they made right here at 2 o'clock Eastern. But then Jerome Powell was asked a question at about 2:15, and I think it was by the Fox Business News. I'm blanking on his name. I see him all the time on Fox Business News, but he asked a question to the effect of the March meeting and whether or not what they were. So one again, let me back up a little bit. One of the Fed's comments that they made in their statement, one of the things they said in their statement that came out at 2 o'clock, had to do with I'm trying to think of the way that they said it. Maybe I can find it instead of trying to stumble through it like this. But their comment had to do with persistent and sticky inflation, and whether or not they didn't say in their statement whether there could still be a March price cut or not. That this is what it was. I'm sorry, I was stumbling through it. They were talking about gaining confidence that inflation is on a sustainable downward path. So the question, it was Ed Lawrence with Fox Business News, asked Jerome Powell. He said, "What are the chances you're going to feel that confidence by March?" And I don't remember Powell's exact answer, but I couldn't quote it verbatim. But what he basically said is, I think it's really unlikely we're going to feel that way by March. So anyone who was myopic enough and in my opinion foolish enough to think that there was still a rate cut likely or a rate cut coming as soon as March, that's when that wet blanket that he had pulled out just got thrown over the top of the fire and completely put it out. And I think if he could walk it back right now, I think Jerome Powell would walk back what he said back in October about the probability of 3 rate cuts in 2024. Today's comments made it seem much different than that and made it feel like there's no way right now today for them to definitively say or even speculate that there could be 3 rate cuts. So, this is just like we talked about yesterday. It had more to do. No one was surprised by the decision. It had much more to do with Powell's comments than it had to do with the decision about what to do. It was the comments that were everything, and the comments specifically on rate cuts, how soon they would come along, and whether or not there would still be several rate cuts. He really quashed that idea. Along with that, and this is the part of the story that may have been a little bit overlooked if you were, and I admittedly, I was kind of hyper focused on Jerome Powell's comments and what he would say today. But this morning before the market opened, we had the ADP employment. This is the private employment report come up. I want to comment 2 things about this. Number one, it was a pretty big miss. New jobs reported for the month were considerably lower than what the consensus was. 145,000 was what was expected. It came in at 107,000. Not only that, but even though this is not a huge revision down, the revision down from the prior month of 164 down to 158, I find it curious. And I know every time I bring this up, it makes me sound a little bit conspiracy theorist. I'm okay with that. If you think that of me, honestly, I don't care that much if you think that of me. I find it curious that almost without exception, you might find 1 or 2 anecdotal successions on some meaningless reports. But on the bigger reports, economic reports that we pay closer attention to, I find it interesting that most, if not all of the revisions are not favorable to the current administration. Now, before you start jumping on me and thinking that is a very partisan, I'm saying this about whichever administration is in power. I'm not saying this is a Democrat only or a Republican only thing. I think this is a Washington bureaucrat thing. I think it is government employees whose number one goal above all else is to preserve their job and the need for their job. I'm a little bit. Most of my friends think that I'm incredibly Republican and conservative. I would tell you that I'm much more conservative in my politics on most issues, and I probably align much more with the Republican Party. I don't mean to offend anybody by that, but if you are offended, that's your problem, not mine. But I'm of the belief that we can have very different political opinions and still get along and still be friends, because we all want to make money in the stock market, and that's the reason I'm here. So but I actually find myself in some cases much more of a libertarian than most of my friends would realize, and the reason for that is I believe that most of our government agencies are non-essential and should not exist. When we talk about government shutdowns, and that subject seems like it comes up every year now, but at least every couple of years, at least every big political cycle, you get the disagreement in Congress about budgets and about approving budgets and funding the government, and you always get the media hype up this idea of a government shutdown. I get that it's political. It's probably always going to be that way for the rest of my life. It's been the norm more than the exception for the last number of years, maybe the last decade or two. What infuriates me is every time that subject comes up, the conversation about shutting down non-essential government agencies, because I am firmly of the opinion that any government agency that fits into that category of a non-essential government agency should be done away with immediately without hesitation. If you can shut them down as a non-essential government agency, why the hell are we paying for them at all? Get rid of them. I believe a lot of these economic reports that come out are done by bureaucrats that simply want to preserve their jobs. And they oftentimes, even if they're doing this subconsciously, I'm not saying this is always nefarious, but even if they're doing it subconsciously, their overriding tendency is, I've got to put out numbers that favor the person in office or the people in power right now, because they're the ones who can preserve my job right now. Now, do I think some people are overly political and partisan? Yes, and I think they should be gotten rid of first, because they have no business being in a government bureaucratic job. But it's not a perfect world, and we can't automatically make that happen. I wish to God that we could have people separate their politics from the job that they do, when the two should not be mixed. And in most of these government agencies, the two should not be mixed. So, but I find it, conspiracy theorist or not, I find it curious that these numbers tend to always get revised away from the initial report, because the initial report seems to over favor the current administration. And that's the case, I believe, with today's report. Now, this was relevant to the market, if for no other reason, because this is a chink in the armor over this narrative that has been maybe accurate for a year or more, that in spite of inflation, in spite of some challenges with the macro economy, we've had an incredibly strong jobs market. This report, along with the report we got a day ago, they're starting to paint another picture. I mentioned yesterday in the podcast that if you take a look at the headlines yesterday, they're not up here today, but the headlines yesterday: PayPal laying off, Microsoft laying off. I can't remember who else it was. There was another big tech company laying off. I heard today on as I was listening to the radio out doing some errands, I heard that in January alone, the technology sector had over 42,000 layoffs. And it's not just the technology sector. You're getting this happen in a lot of different places. And it seems to be at odds with these continuing strong numbers. It was the JOLTS report yesterday that said there was an increase in the number of job openings, which means not as many people filling jobs. And then today you see that there's not as many jobs added to the economy. And then we get the full employment report on Friday, and this is going to be one to watch. This is a big consensus range right here. This range of 120 to 200,000, that's a big range. The mid spot on that is 170. Last month was a surprise at 216. Don't be shocked if that number from last month gets revised down. I have a feeling that will get revised down, and I have a feeling that you're going to get a number that's at or better than 170. What I'm going to be paying more attention to is how the number from the previous month gets revised, because I think it will get revised down. I don't believe our unemployment rate right now, number one, because it's not an accurate reading on who's unemployed. It's only a reading on who is collecting unemployment checks. And as people lose their unemployment and are still unemployed or underemployed, that's where you get a better picture of what's really going on with the jobs market. I think the jobs market right now is not nearly as strong as the numbers would suggest. And so we'll see how it plays out. It's going to be incredibly interesting. It was like I said, it was a fun day to watch. It was fun to, I mean, not if you were losing money, and I hope you didn't. One note, I talk a lot about AMD. It's one of my top picks of the year. Yesterday and today, AMD got beat up a little bit, but I got to tell you, as I dug into their numbers more from yesterday, they're talking about doubling their AI revenue and production for this upcoming year. And that's a big number to be able to double of that. They showed some weakness in some gaming chips. They showed a little bit of weakness in some other stuff. But I got to tell you, I have not soured even a little tiny bit on AMD, as it's had this little bit of a run to the downside. If they do crossover technically on the RSI, on the 5 and 20-day moving average, and if we get a full crossover on the MACD, I'm looking for them to set up some support somewhere between 150 and 140. I don't think they're going to come down quite as far as 135, but I could see AMD making a continued slide down to 150 or 140. As soon as they hit that mark and give us just the littlest type of a bounce, I'm going all in on AMD. I'm gonna go long term, and I'm gonna load up on AMD. And I think you should keep some of your powder dry for that possibility. One other thing I wanted to talk about yesterday after the market closed, and I think this news was breaking right around the time I was recording the podcast, Walmart announced a 3-for-1 stock split and said specifically that they were doing that because they want to make shares more affordable for more people, and they want to make shares specifically more affordable for their own employees that are going to have the opportunity to participate in stock buyback or stock purchase things. If you take the current price of 165 and divide that by 3, that's going to put Walmart down in the neighborhood of a $55 a share stock. The actual split, I think, is scheduled to take place on the, I could be wrong on this date, don't hold me to this, but I believe it's set to take place on the 24th or the 25th. There might be a headline down here that says what day that's going to happen. I'm not seeing it right now. Here's the 3-for-1 stock split was announced. And I believe it's February 24th that the actual split will take place. It's not listed right here yet, but I think it will get listed here pretty quickly. They're going to do it shortly after their earnings report. I got to tell you, folks, Walmart, in my opinion, is arguably one of the most recession-proof companies. And even if we don't go into a recession, if we have what a lot of people are referring to as a rolling recession or continued persistent high inflation, what we oftentimes call stagflation, if that continues, Walmart is going to be a great place to park some money long term. So this is another one that I'm watching and waiting and keeping some powder dry. Walmart was up for a good portion of the day, but once Powell made the announcements that he did, you can see it got up here almost to 168, 167.80 was the high of the day. But after that announcement and the commentary by Powell, it gave everything back and finished just a little bit in the negative. It's gone up from $150 a share to almost $170 in just about a month and a half. Again, I would not mind seeing a pullback. I don't think it'll be any deeper than maybe down here to 163. Maybe you get down to 162, somewhere in there. I wouldn't mind seeing a pullback from where it's at right down in there. And again, just like with AMD, if it gets a little bit of a bounce, I'm jumping in long term and jumping in with a lot on Walmart. So I would encourage you to, like I said, keep a little powder dry for those potential upcoming trades. Tomorrow, there's going to be a lot more to talk about. We're going to talk about Meta. We're going to talk about Apple. We're going to talk about Amazon. Obviously, we'll talk about whether today's move down has some hangover that continues on to tomorrow. So make sure you tune in tomorrow and every day that the markets are open. And we appreciate you being here. Have a great rest of your day, everyone. Thanks. Bye bye.